Bismillahirrahmanirrahim. Assalamu alaikum students. This is Faizan Farooq and today we will discuss IAS 37. IAS 37 provision and contingencies. Okay, so provision is a separate thing. Contingencies are different story. So remember one thing. We will start discussing this IAS in two parts. Number one, provision. Number two, contingencies. So let's start with provision. What is provision? Provision, provision is a liability of uncertain timing and amount. Allahu Akbar. Wallahu Akbar. What I said? Provision is a liability of uncertain timing and amount. Sir, I didn't get you. I know. It's a very tricky definition. Provision is a liability of uncertain timing and amount. Uff, Allah Akbar. So, what do you mean, sir, with the uncertain timing and amount? So, it's very easy, Habibi. Listen to me carefully. There might be a liability, a obligation may occur in future because you did some past contracts, but it's not sure shot. It's not like you purchase goods from someone and you have to pay. That is called certain. Provision is not certain. We are not 100% sure of occurrence of that thing. Example, you have a restaurant. You are serving customers. One customer ate food from your restaurant and he got some problems. He went to the court and he filed a case against you. Now, as in the past, you sold food to him. That's why presently he filed a case against you. And in future, the decision will come. And wallahi, we are not sure about the decision. Either this decision might be in our favor, might be in the favor of customer. Oh, so that type of thing, that type of drama is the drama of provision. That a liability, the amount which is gonna be payable in future is unknown, not sure. When? Not sure. In Asian countries, the court case might be years. But in some countries, the court case might be months, but nobody is sure about it when the decision will come and whose favor it will come. So, I hope you got. Provision is a liability which is coming on your head presently because you did something in the past, but the result in the future, and we are unaware of how much we have to pay and when we have to pay. So that is a simple definition of provision. Remember one thing. Provision is a liability of uncertain timing and amount. So there is one thing that is called obligating event. Obligating event means in the restaurant, you serve the food. That's why the problem occurs, problem happen, and you have to face the case. Okay? That type of event is called contractual events. Sometimes there are some legal responsibilities. By law, you have to serve good quality of food and something like that. But remember, in the past, there's supposed to be an event between two parties, and because of the law, any legal or contractual event must occur in the past. Presently, one party is going went to the court of law against you, and in future it's gonna be settled down, but in whose favor, how much you have to pay, when you have to pay is unknown, so it's a liability. Accounting suggests that you should record, or you can say we must record provision if and only if and only if, yani is, I am emphasizing on this word, if and only if the outflow, yani you can say the chances of outflow are probable. Sir, what is this drama, yani? Who has it? What's this probable, yani? What is this probable means, sir? So, Habibi, relax. What is probable means? Probable means that the chances, that, like my example, you are a restaurant owner served the food, and the guy got ill, and now he is in the court, and you are facing the case. So, probable means that the chances that the case will be successful, or you can say the chances that the customer might win the case are probable. Probable means more than what I said, more than. Now, my friends, now 50% greater than 50%. As per IAS 37, probable. Guys, ladies and gentlemen, if the chances of outflow are greater than 550%, that is called probable. Easy English you want? Easy English, easy peasy English? That is called more likely. Yani, probable means more likely, chances in percentage form, 50% or more. Then IAS 37 suggests that if you have an obligation because of your past event to satisfy in the future with uncertain timing and amount, but the chances of outflow are more than 50%, habibi wallah, then it's gonna be provision, and we have to record the provision right away. Don't wait when you will pay. Don't wait, the decision will come. No, 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 no. Record it as an expense right away. And you will make a debit to the expenses in SOCI, any profit and loss expense, immediately right away. And record a liability provision for lawsuit, provision against this and that, whatever name you would like to give it, give it. I don't say anything to you, but expense debit, liability credit, that is the provision. That is what? Provision. Sir, what is the difference between provision and normal liabilities? So, my friends, remember, provision is a liability, but the probable feature is there, but the liabilities are certain. Any journal liabilities like trade payable, you bought goods, you have to pay. You borrow money, you have to pay. You took money, you have to pay. Bank overdraft, you have to return. That's all the liabilities with certain amount. What I said again. This is certain amount and timing. We are aware of. We are aware of. We are aware of that when and how much. When and how much we will pay certain timing and amount, and certain in the IAS 37, certain means that the chances of outflow are greater than 90%. If the chances of outflow are greater than 90%, that is certain. Normal liabilities, amount and timings are known. But provision, uncle, we don't know when the case will result, when the lawsuit will be concluded. So we don't know. So unknown, uncertain timing, uncertain amount is provision. Certain timing and amount is a liability. Okay, guys. Now, after that, I have one more thing. One more thing I will write in front of you now. Like, I would like to make a table, like this. Bismillah. IS 37. Let me think something like outflow. Outflow is, guys, certain. Outflow is probable. Outflow is NOT, not probable. And I will write one more thing. This I will explain you guys later. Remote. Khalli walli remote. Ignore it now. First thing, if the outflow is certain, yani you are sure about the amount and time, that is your liability, my friends. And you must, guys, you must record. Halas. Provision, probable. Probable means greater than 50% chances of outflow. Again, guys, you have to record liability and expense. Okay, sir. We will record this one as well. The numbers will be judgmental. And how? We will learn soon. Then, not probable. Not probable means that the chances are in between 5 to 50. Yani outflow chances are there, but the chances are below 50%. More than 5, but below 50%. So, in English, English, that is called possible. Has possible, and possibilities are known as contingent. What? Yes, the second name of this IAS, provision and contingencies. What? Provision and contingency. And I can say contingent liability. And remember, IAS suggests that, guys, this is possible, not probable. The chances are not more than 50. The chances are below 50. So you know what? You will just disclose to the shareholders. Just disclose, not record. Haram alaik. Entry mafi, no entry. Mafi debit, no credit, no expense, no liability. Just at the end of the financials, in the notes, just explain to the shareholders and users of financials that Habibis, plural, beloved. Habibi yani beloved. Habibi shareholders and user of financials. We have a case, but we are sure that it will not occur. Yani the chances of occurrences are below 50. So just for your info, example is the case you serve food The guy got ill. He went to the court. He filed a case against you. And now your lawyer is saying, Habibi, the problem is there was a cockroach in your kitchen. The CCTV video is there. That's why you will lose the case as a restaurant owner. So this is probable outflow. Lawyer is saying we will not win the case. The other party will win the case. So that is a simple thing, probability of outflow. Khalas. But what if the lawyer says, there was nothing wrong with your food. I'd have a laboratory report of the remains. Yani the food was okay. The customer had some other problem. That's why his stomach got upset. So don't worry. I am your lawyer. I am your lawyer. I will save you, inshallah, bismillah, in the court of law. Don't worry. So that is the case. We can say possible. Got my point or no, guys? Give me feedback on WhatsApp, huh? I hope guys understood what is provision and how to deal with it and what is contingency and just to disclose it. Next thing, guys, is remote. What is remote? If the outflow, in English, remoteness means ignore, yani khalle walle. If the outflow is in between 1 and 5%, 1 and 5%, in between 1 and 5%, that is called remote. And khalle walle remote, nothing, Baba, nothing. Do nothing. No disclose, no record. No disclose, no record. No entry. Mafi debit credit, no debit credit. And no disclosure. Khalli, yani ignore it completely, my friends. That is the journal idea, journal theory of outflow cases which deal with provisions and contingent liabilities. Next video, inshallah, you guys will learn the contingent assets, the inflows cases, the way we covered up the outflow. Then next video, inflows, and after that, one more video where we will have practice questions. So stay tuned and like, share, and subscribe my channel. Take care. Bye.